Hey everyone, this is Michael Bengiat from Lifetime Investor, and this is the Stock Picks weekend video for October 15th, 2022. Here's our disclaimer. You can go ahead and pause the video and read this. So let's go ahead. I'm going to, as usual, talk about the current market environment, and then we're going to talk about the stocks on actually we only have some stocks on our watch list at this point, and we don't have any positions. So the ready list should have been crossed out, but that's all right. So let's just go ahead and get straight into it. So nothing has really changed. The environment is still red. We have no exposure. We're in a severe bear market at this point, and we're just not getting really any traction from leading stocks. And when I say leading stocks, we're always trying to look for stocks that are making new highs at or near all-time highs or new highs, and showing all the characteristics that we look for in leading stocks, like strong fundamentals. But we're also at this point really looking at the technicals. So if there's a stock that's making a new high versus most of the market is making a new low, there's something going on there. So we're always looking at that, and we use relative strength as one of our main tools to do that. So what's interesting is that we had a massive turnaround on Thursday. And then, unfortunately, we gave back most of that, or a good chunk of it, on Friday, yesterday, and which is not a good sign. It doesn't look like this rally attempt that started Thursday is probably going to last, though anything can happen. And we just had, my big watch list that I use to, choose the stocks that go on our service was almost solid red. So, but we have some kind of, people call them green shoots. My list is actually getting larger and larger. So there's more and more stocks that are sort of holding up, forming bases. A lot of them are just not ready yet, but they're looking pretty strong, and that's something we haven't seen in some time. So that's a really good sign that we have to have. For a long time we would just get one or two stocks that just they were outliers. They just started going up and they would break out. Most of them never really went anywhere. But you can't have just a few stocks and then trying to pick those one or two out of the 9,500 stocks in the market, and they just really weren't going anywhere. So these are all the things that go into our stock environment indicator. How many stocks are breaking out? How are they doing? How's the overall market doing? Just there's a lot of things that go into it. So, anyways, those are some positive things, and we'll see how that works out. If the market does break to new lows and the list doesn't start shrinking, that will be also a pretty good sign. And just from the technicals, we talk about in our market trend advisory service, the market is really oversold and probably is going to have a pretty big rally pretty soon. But how the market reacts to that will be really key. So at this point, you don't have FOMO and feel like you're missing out. There's really not much you're missing out at this point, but we want to stay engaged. That's something I do talk about a lot. Because the market can change very quickly, and we can go from an environment for the last almost 1.5 years where breakouts just didn't work and stocks just really chopped people up to one where they start working and really start making some nice moves. So that will happen. We just don't know when it's going to happen. So let's go ahead and just go through we have, it looks like 8 stocks on our watch list. So this is kind of the best of the stocks out there. So this first one is Bel Fuse, ticker is BELFB. And you can see, here's the S&P, this black line, coming down, making new lows. And what is this stock doing? It's making new highs. In fact, you can see this stock formed a nice cup base and broke out on earnings over here. It was nice earnings. The earnings were up 103% versus the same quarter a year ago. Sales were up 23%. Margins were up 10%. So nice number. You can see we've had three quarters of triple-digit earnings growth. So that's actually pretty good. But you can see here, the market was going down. This stock broke out, and it's formed another base up here while the market's going down. So there's definitely something going on with this company. Now, of course, with any stock, you have to always weigh the positives and negatives. And, one of the negatives of this is it's very thin stock. It doesn't even trade average volume 100,000 shares. So it can make some outsized moves. But On the positive side, the negative selling has been really minor. As you can just see here, there's a lot more positive spikes, up-day spikes than we're getting on the downside. So this is one, the RS is 99. You can see the relative strength line is really just moving up nicely. So this is one we're going to watch. It did try to break out on Friday, and unfortunately, the market just gapped up, and unfortunately, sellers came in, and a lot of stocks look like this. They opened up high or went a little higher, and they closed down at its lows right on the 50-day, which it's been proving to be support for the last week or so. So that is one of the stronger looking stocks. So we are definitely keeping our eye on that one. The next one's Palomar. They're a specialty insurance company. Ticker's PLMR. Now this one actually even looks stronger. Look at this relative strength line is really powerful. And it had a nice reversal here. It looked like we had one day, looked like it was going to be the end of the run for this one, but it managed to close up. Let's see, it didn't quite, 92.79. Yeah, actually almost tried to make a new high on Friday, but it closed down at the bottom. But very, very strong stock here. If we look at annual earnings, I mean, they're growing. We don't see anything real massive on the upside. And it's, again, kind of a thin stock, only 168,000 shares traded. But definitely, something's going on. When these stocks are making new highs and the vast majority are not, you want to keep your eye on these because they can turn into really strong leaders. In fact, this is what we're always looking for, because coming out of bear markets and major corrections, those few stocks that are holding up, a few, out of all the ones that are holding up, a few will turn into massive winners. We've seen it for over the last 100 years. You'll get, the best stocks will already be showing strength even when the market is weak. And then once that pressure is off of the market, it's like a spring holding it down. Some of these stocks just blow up and they just take off like crazy. So that's why we're watching all these. This next one is Pliant Therapeutics. Plrx is the ticker. This one's a little more speculative. We don't have any earnings. They're just really not much sales, a few $1 million in sales. Really not much. You can see annual earnings are still negative and growing. So that's another little warning sign there. But it's definitely, had some good news of whatever here, probably some kind of FDA notification or acceptance. And it's really just been holding up here. So what we like to see on these big gap ups is our sellers piling in. And in this case, we had about a 30% drop, but we managed to come back up, made a new high, and we're still just holding up here. So we don't have a lot of sellers, coming into the market and taking profits up at this level. So that's a great sign. That's what we're always looking for. The next one is Aspen Technologies. Ticker is AZPN. This one has been on our list for a long time. It comes on and off as it kind of makes a move. As you can see, it just keeps grinding its way higher throughout this bear market. And they develop engineering software. Again, this is another little thin one. And, even though they're thin stocks, there's a plus and minus to that. The plus is that it doesn't take a lot of buying when you have a thin stock to really move it. And so if a fund or something comes in there and decides they want to buy, they want to own 5 million shares of this, that would just send this thing up high. So it doesn't take a lot of buying versus, a stock like Apple, 5 million shares is nothing. It wouldn't even, you could probably come in with a 5 million share order and not really even move the stock. So that's the positive side. The negative side is that because it's a thin stock, you don't have, it can have pretty outsized move. Now this one too, you can see that the earnings are growing nicely. 3, 4, 5, 6. There's 2 4s, 6 and 7. So nice, just strong earnings growing. The stock is really doing nicely and outperforming. In this last quarter, we had really, really strong earnings and sales. So that something is going on there that we want to keep an eye on. Next one is Cross Country Healthcare. There's actually been a couple of these healthcare staffing stocks that have been appearing. So now this one's been a little more volatile. You can see there's been a lot of just big moves, but up and down, a little harder to trade. And it's like the last one too. Sometimes even though people say, well, why haven't you been buying this? Well, in ones like this too, they're just very hard to buy. It's like a bucking bronco. You could have bought it coming out of here, but it just reversed, would have kicked you out, then shot back up, then shooting right back down to the 50, then shot up, and then it's just been so volatile. These moves are just very hard to hold on. There's been no real place to really get a hold on. Now that's contrasted with, look at the nice move it made here back in May. Just very smooth, just nice uptrend, and then it went parabolic, and that would have been in place to have sold into. But that's the nature of some of these stocks. This is a volatile one, so we're watching it. Ideally, it will, and it's extended now. It tried to make a new high and closed. It had a poor close on Friday, but we'd like to see it, somewhere around here, just tighten up and form a nice pattern that we could actually buy with a nice pivot point there. But we don't see it yet, so that's why we're watching it. Now, some of these stocks, especially the last few, we have them on our watch list, but we don't have any kind of buy range. They're just not set up yet, as I just mentioned. But we want to watch them because they're acting very, very strong in this market. Okay, next one, Travel Centers of America. This is a new one. A few positives here. We have it's industry group 17 out of 197. That's really good. For whatever reason, there was a huge banner year on the annual earnings. We shot up. We were negative for many years here, 16, 17, 18, 19. And then we went to $1.50, $4.11, and then $9.32. It's more than 127% jump. Not sure what's going on with there. And then, of course, we're coming back down. But still, that's even at $4.99 estimates, which are notoriously wrong. If you look back, this will end up being something probably pretty different. But just looking at the earnings, there's some nice earnings and sales going on here. So for whatever reason, maybe because travel is back again and you can actually travel, it's acting really pretty well. So we're watching this. We do have a buy zone 59.70, really just breaking above this because there really isn't a lot of resistance right there. Sorry, I go a little higher here. Yeah, so that's where, and we just had a few days here where it popped above. So that's our buy zone. We're just watching and waiting there. Couple more. Next one is Syndax Pharmaceuticals. Ticker is SNDX. You notice all these stocks charts, they look similar because they're all leaders. They're all acting pretty well. Now this one's been also pretty volatile. If it gets much more volatility, we're going to take it off because we're getting what's called the megaphone effect. So we don't want to see this. This is showing that volatility is increasing. We want it to see it should be increasing here and then tightening up. That's where you want to be buying it. So you can see here, we formed like a double bottom. You can call this a cup, even though it's a little sharp. And then we tightened up here in this little handle, and then we broke out, and then we went into this consolidation over here. But the volatility is making us just kind of watch this, even though we do have a buy zone. We're just more watching these than anything else. So we will probably be updating that too and changing that probably in the next week. And then finally, we have Cardinal Health, Medical Wholesale Drug Supply Industry Group, which is now group 24 out of 197. This is actually a little bit better chart than some of them that we've seen, and mostly because it's not as volatile. You can see we had a really nice move here, and then we've kind of came out, and then we're starting to tighten up again. You can see here we kind of came down, and then we're starting to, we'd love to see this really just get really tiny trading on no volume. See, the closer you are to new highs, and then you have volume dropping, means that you're getting up to points where sellers used to come in, which is around 71.5, 72. And if you can get back up there and there's just really no trading volume, that's a really good sign. It just means that the sellers have moved on and they're not really looking to sell anymore at this point, which gives the stock a little bit of buying power, just sends it straight up and into a nice move, up move. So this one in terms of earnings, nothing fantastic, but that's what it is. It's just been look at their annual earnings, just a solid mover, nothing really, really big. overall ratings are pretty good. It's a little bit more of a defensive name than some of the others, but it's capable of making a nice move. Here we had it going from 50 to 70. So this would be a nice tradable one if we get a better market, but we're just watching it just like the rest of them. That's it. We don't have any other stocks on our lists. In terms of our long-term outperformers, there's really nothing happening there. Most of the stocks that we used to get on there were tech related, and then in this market, they're just not performing, or they're breaking below moving averages where we like to buy them. So we'll be coming back to that when the time is right. But for now, we do have some leaders we're watching, and we continue to watch them. But as of now, we're not buying anything. Just not the time yet. The risk of losing is still higher than gaining. Okay, well, thanks, and that's it for this week. We'll be back next week. Okay, thanks.